vlog. I'm Amira.
Welcome. I'm Wilfred.
Wilfred, and today we have a special guest, Vincent Tong. Introducing him today, Wilfred. Why don't you share with everybody?
Yeah, Vincent is great. He's one of the top mortgage brokers in Canada, top 75. He underwrote $100 million.
Over 100, yeah.
Over 100 million last year or this year?
Last year.
Manages a team of 40, and yeah, just a great friend. We're very honored and thankful that you joined us today.
Thank you.
And we'll dive right into it. We'll nail you with a lot of questions, all about interest rate and basically the finance side of real estate. So why don't we get started, Amira?
Yeah, so starting out, we wanted to start with the big question right now, which is what is happening with the interest rates and where do we see this going?
Very, very hot topic. First and foremost, thanks for having me on the show. But yeah, interest rates has been a hot topic amongst agents and borrowers alike. Earlier in the year, we didn't forecast this kind of increase, and none of the chief economists saw this rapid increase, because I think most people didn't expect the amount of inflation that we're going to see, right? The Bank of Canada always has a target of 2% as their inflation target, and we've been sitting above 7% for the past few months. The only mandate for the Bank of Canada is to keep inflation low, so they are using their only tool, which is to rise interest rates to try to combat core inflation. And what that means basically is you see price of cars, price of food, the price of gas, right? Everything across the board is costing more and more because there was so much pent-up demand throughout COVID, and there's such a decrease in supply due to supply chain shortages and just overall economic shutdown, right? So all this backlog is causing stagflation and inflation right now that we're seeing. So the interest rates are going up, and we're going to probably see this for the next, originally we thought another 12 months, but at this point with new economic data, we're thinking 18 to 24 months. We still have some turbulent times ahead, unfortunately.
And with that in mind, real estate usually goes up.
Yeah.
Always has gone up in the past.
Yeah.
So
we're a little biased, obviously, but
we are biased.
It's a good asset class. It's one of the strongest asset classes in Vancouver, obviously. So
for sure. And that being said, what are some of the best strategies for buyers out there who are looking for deals, because we're seeing deals right now?
Yes.
Right?
Yes. So obviously you guys are aware, prices were at a peak, in spring of 2022. We've seen it come down 5 to 10% in some market sectors. So there are deals out there, as you said. Now, another thing that people have talked about is interest rates. They're so much higher, 2%, 3% higher than they were at the peak, right? Our job as mortgage brokers is to kind of talk to the clients and manage those expectations. Yes, rates are higher, but if you can get a property for a lower price, then you can be at a break even or even at a plus at the end of the day. So just for some quick numbers, let's say a $700,000 condo, right? Right now has gone down about 5%. That's $35,000 cheaper. So you're buying for about $665,000. If your rate right now for a $500,000 mortgage is about 2% higher than it was at the peak market when you would have bought it, you're looking at a difference about $600 a month. Lots of money. Like it is definitely costly for a lot of people, right? $600 a month over 12 months, you're looking at a difference in a year of $7,200. Your cost of borrowing has gone up $7,000, but you're getting for a purchase price $35,000 less. You basically bought yourself another 5 years, assuming the property values have stayed the same, assuming you're getting a fixed rate at the same rate as whatever it would be earlier March, end of last year. You're at a break-even point, right? And a lot of borrowers don't understand that if you find a good investment and you have time tolerance, most of the time you will come out on top. We see a lot of clients, rush into buying because everyone's buying, and we tell them, hey, this might not be the right time for you to buy. It's a little over your budget. If rates go up, you might not be able to afford the payment. For some clients, it is the perfect time to buy. They have the down payment, they have the income, and they can handle the payments. Then they have all the time in the world to sit on the investment to wait for it to appreciate. The ones who are overstretching might not be able to handle the payments later down the line. Then when the market's a little softer, let's say it plateaus a little bit, they might sell for a loss and they might lose out. So I say always in time tolerance, you got to make sure that you can afford your purchase. Don't rush into it just because everyone's buying it, and don't go for the gold rush. And talk to your real estate agent, talk to your mortgage broker, and make sure that this is the correct investment for you. And if you do all those things, I'd say 9 times out of 10, you're going to make money in the long run.
And I mean, we both work with a lot of first-time home buyers, and notice that you do as well.
Yes.
And one of the things I've noticed is that a lot of people are hesitant to reach out to a mortgage broker. They'll start shopping first.
Yes.
Find a home, maybe even fall in love with it.
Yes.
Or maybe just test the waters and then go chat with you guys. And a lot of the time it ends in disappointment or, a surprise of, I could have afforded a home I saw a few months back that I really loved, but I didn't think it was my price range. What does it look like to come and chat with you? And, people I guess want to know as well, can they come to you before they're sure if they can even buy a home?
100%. I think the mortgage broker or the bank or the lender, it doesn't matter, is always going to be your first stop. Because, time and time again, we've seen clients say, I'm looking at this $800,000 property. We love it. It's perfect. Wilfred or Mara showed me this property. It's amazing. And then we do the pre-qualification and we say, this is kind of out of your budget. This is not what you can afford. You're looking at it with the $600,000 range. And then all of a sudden, they're looking at $600,000 listings that might be a little older, or they want a 2-bedroom or a certain size requirement, and then they start getting disappointed. And then it's not going to be, the glamour and the glitz is kind of gone, and then the excitement's gone. Unfortunately, another thing is we also don't want to waste your time as agents because you start shopping for all these properties. The client can't even afford it. You're just setting them up for disappointment, as you said. So I think speaking to your banker and mortgage broker is always important, especially in this rising interest rate environment, because the stress test is just getting higher and higher and higher with each increase. So qualification for borrowers is going lower and lower and lower. What they can borrow from the bank is shrinking. So they need to get ahead of it, because what they can afford 3 months ago is definitely not what they can afford now, unless they're well below their threshold, right? So.
And for those of people who don't know how it works, how does the stress test work?
So what test when the B20 came out, 3 years ago, basically what happened is Canada and the feds wanted to make sure that when you underwrite a mortgage, you are testing it at a rate higher than what the client is paying. The reason for that is in a rising interest rate environment, they want to ensure that the borrower can still afford the payments under the bank's thresholds. It's called gross debt service and total debt service. They want to ensure that even at a higher rate, can the monthly payments be feasible for this borrower? So that's the stress test. And what they do it is 2% above your contract rate or the Canadian benchmark, which is 5.25%. Now, we're already seeing rates at 4.8%. For variable and 5.29, 5.39 for fixed rate. So the stress test is effectively 6.8% or 7.2939%, much higher than what people would have been paying previously. As such, with every rate increase that we're seeing from the Bank of Canada, qualification for borrowers is shrinking and shrinking. So what people can afford is being reduced with every rate announcement, and that's why it's so important to be prepared and get ahead of this with a mortgage broker and with your real estate agents, because you don't want to be in a position where you could afford a $700,000 property 2 months ago, but after the rate announcement at the end of this month, next thing you know, your budget's down to $680 or $675, and you just put an offer in for a $700,000 property. You might lose out on that offer now because you can't afford it. Right? So getting ahead of the game is very, very important. Being prepared is very important.
I think that part carries over as well in any environment. So even with the interest rates when they were lower, it's still important to kind of plan ahead. And we had talked about that earlier as well, especially for first-time home buyers who don't know the process. What does that look like? When should they come to you in their buying process? And what does that conversation look like? What do they need?
We always love it when they come in the beginning of the process, because we were talking about this before as well. If they're looking at properties like $700,000, $800,000, they really like them. They're like, wow, this is so pretty. I really want this property. But next thing you know, their budget only allows them a $600,000 condo or a lower end townhouse. They might be disappointed later down in the process, right? And their expectations were not managed. So we like to get ahead of it and be the first point of contact before they even shop with you guys, right? Because A, we want to make sure that they don't get disappointed. B, we want to make sure that their budgets are realistic. and they understand what it takes to like carry on a mortgage. Because some people even can afford the $800,000 condo or $900,000 condo or house, whatever it may be, but they don't want to have that monthly payment on their liability. They're like, no, I have to go eat at Maynam every month, or at Blue Water Cafe. I need to have that dinner out, right? I don't want to spend $4,000 on a mortgage every month. I want to keep my cash flow high.
Yeah.
So having these conversations, managing those expectations are super, super important. And the last part is you guys. We don't want to waste your time either, right? You start shopping and getting all these listings for all these beautiful places that are outside their budget, and the next thing you know, you got to modify it. It takes kind of the magic away from it, right? They're looking at properties at this price point, and now it's changed. So
yeah, it's always great when people know what their budget is and when they've had those conversations with you in advance. Because I find it really exciting. If you know what someone's budget is, you can actually start searching for a dream home. If you don't know what their budget is, like you said, you're sending them properties that are out of their price range, and then you have to be the one, with them in that journey when they get that disappointing news. And maybe they even miss out on a property, or maybe you guys miss out on a property that's in your price range because you were looking too high.
There you go.
So,
opportunity cost. Huge.
Yeah, exactly.
Opportunity cost is huge.
So, appreciate that information for sure.
All right, so Vince, for pre-sales, so that's a big thing here.
Yes.
In Greater Vancouver, people love them. People made a lot of money.
I bought a lot of pre-sales myself. I love pre-sales. There's a little catch to them, obviously, but yes, pre-sales are great.
Yes, and speaking of catch, because I'm sure people would love to know what's the catch, potential catch, what's the risk, and essentially how does it work on the financing side?
Of course. The potential catch is with real estate, you basically buy a property at a certain price before it's built. So there are caveats, right? Number one, the developer might not build it exactly how it looks in the show home. And the show homes are obviously nice and fancy in there as well, right? So you don't get to see the product before you buy it fully, the actual product, right? Secondly, prices may drop. You might buy a pre-sale, but 3 years down the line, values will come down a little bit. You might have to come up with that extra down payment. And some people are not prepared for that, right? Obviously, in the past 6 years, most of the time we've seen increases that people have made, $100,000, $150,000 on their pre-sale. But there are those stories in certain areas where they did lose a little bit of money and had to pony up a little bit more just to make that difference up, right? And the last thing that we always tell clients is we need to make sure they can afford the pre-sale. Because you don't do the mortgage until 4 years, 3 years down the line, right? So you're not actually really applying for the mortgage until later down the line. There are kind of tools at the bank, called builder cap mortgages, where banks can approve you for a mortgage ahead of time, but a lot of times they still will check closer to closing to make sure your credit's still applicable, your income's still there. So there are some pitfalls to doing a pre-sale, because you don't know if you can get the mortgage down the line. So what we do is we always prepare the client, and we say, okay, if you want to buy this property, how much income do you have to make? What's your credit has to be? What credit profile do you have to have? What things do you have to watch out for and prepare for? And if they have all those tools, 9 times out of 10, they'll be fine, right? And obviously we can't see into the future. We don't know what policies change, and we don't know what the Bank of Canada is going to bring down the pipeline in 3 years, right? But on average, we tend to pre-qualify and pre-approve clients conservatively when they do a pre-sale, just to make sure that if rates do go up or there are some changes, they can still afford it.
And when would you like to see the buyer? 4 years before we complete, or just before we complete on the property?
We see them all across the board, actually. A lot of times I see buyers beforehand, before they put an offer on the pre-sale, just to make sure they can afford it, which is great. I think that's the best thing to do. Sometimes you see them 2 years in, they're like, oh, it's coming up to completion. What's going on? Can we still afford this? And we look at it again and say, yeah, it's all good. Or no, you have to get your income to a certain level, right? So we're very proactive in that aspect to try to get the client prepared and make sure that they can afford the pre-sale. With any investment, there's risk, right? So our job is to handle and mitigate risk. And then once you find a budget, it's up to you guys to find that perfect property within that budget.
That hidden gem.
Yeah,
exactly.
And then you can also create, correct me if I'm wrong, but you create plans with people before they're even ready to buy a home, right? So they can kind of work their way into being able to purchase.
Yeah, so we talked about pre-sales, we touched about that, saying that the timeline, sometimes maybe you're not ready right now,
Yeah.
but you could be ready in 2-3 years if you get your income to a certain level or your credit to a certain level.
Yeah.
If you have, assuming you have the deposit or down payment.
Mm-hmm.
Also with pre-sales, it's a split staggered deposit structure, right? You don't have to come up with the full 20% or whatever percentage you want to put down. You could do like a 5, 10, 5 or 5, 5, 5, 5 sort of thing. It depends on the developer. That gives them a lot of borrowers kind of a leg in and a slow ease in into the market, which is beneficial to them, right? Package wise, even for us, we help a lot of first time home buyers plan their first purchase, right? Like, this is what you need. This is what you need to be aware of. Property transfer tax, legal fees. You gotta know what to prepare for it, right? At the end of the day, because this is a big purchase. You're not going to the grocery store just to buy some bananas or anything like that. You have to be prepared for this.
Awesome.
Well, thank you so much, Vince, for joining us today.
Thanks for having me.
It was a great pleasure, and we're looking forward to see you next time at your place.
Yes, come over.
We were promised mimosas and a little bit of brunch, I think.
Mimosas, brunch, mojitos, whatever you guys want.
A big party. But yes, thank you again. I think you gave us a lot of good insights.
Yes.
If you would like to reach out to Vince, we'll put his email in the description, as well as his team works not only in English but various different languages. So feel free to reach out if English is not your first language or you don't feel comfortable talking English. Which languages does your team speak again?
Our team speaks Punjabi, Korean, Mandarin, and Cantonese, and obviously English. That's just my direct team. There's the 5 of us. So we speak all the languages. We help clients all different walks of life, self-employed individuals, professionals, hourly wage workers, second home purchasers, investors, commercial clients, construction clients. We'd like to think that we do it all. So anything, just reach out to us and hopefully we can help.
Amazing. Well, thanks again for this episode, and we'll see you next one.
All right. Thanks,
Take care.
guys.
Bye.